Good evening and welcome to today's class. I hope you are keeping well. Um, just some few things. This my question is looking a bit bizarre, right? I don't know how to reposition it. Okay, maybe I can do this one. Let me see if I can do this. Okay. Yes. This one works. Um, can we have someone to read for us?
Okay, let me read it.
Okay, John.
So that is question 4, right?
Yes, question 4.
So explain briefly with relevant examples in the three bases of valuing an asset.
Oh, okay.
And then what is the difference between capital structure and financing structure?
Okay.
C. List four major players involved in the communication of accounting information for decision-making purposes. Explain briefly the role played by two of the players identified above.
All right. So I don't know if throughout our engagement with the lecturers, we've gone through some of these things. The basis of valuing an asset. I'm sure you've done it, but probably you've forgotten about them. Capital structure and then financing structure. I'm sure you've mentioned them, but you've forgotten about them. Players in accounting information communication process. Uh, they won't tell you straightforward, but I'm sure they've treated it with you, but you've not really looked at it. Okay, so if it's about basis of valuing an asset, number one basis of valuing an asset will be through historical cost method. Right. We value an asset based on its historical cost. Then we can value an asset. I'm not interested in A and B. My interest is in C, question 4C. But I would mention some few things before we get to the C. Then we have current replacement costs. I'm sure as I mentioned it, it would come clear to you. Then we have another basis of valuing an asset called net realizable value. Then we have present value of future cash flow. Then we have fair valuation. I think these are the 5 key ways. I've shared some recording on the platform. Those of you who have gone through it, I think I have a detailed answer to this. I even showed a certain scheme, right, to it. I'll do it with you anyways. Okay. Then if we talk about differences with capital structure and then financing structure, we're looking at long-term financing approaches and then both long-term and then short-term financing approaches, right? So capital structure focuses on only long-term approaches, long-term approach to financing a business. And then financing structure would be both long-term and short-term approach in also funding the business or financing the business. All right. Those are not the concentration. I'll treat a short note with you properly. The C is what I want us to look at for. List 4 major players involved in the communication of accounting information for decision-making purposes. When it comes to decision-making, there are some key players who help in passing on information from one stage to the other and then to the other, right? The first player involved in communication of accounting information process is called management. The role of management in communicating the accounting information is to prepare the financial statement, right? So the role of the first player, which is management, is to prepare financial statement, right? And then the second player that we can talk of will be independent auditors. Independent auditors, right? The role of the independent auditor or maybe external auditors will be, give me a second. Okay, so sorry. We have management. The role of management is to prepare financial statement. We can talk about independent auditors. Independent auditors, or what we refer to as external auditors, their role is to review the financials or to verify the financials and then ensure that the organization is complying with the set standards, right? So one, the role of external auditors or independent auditors is to verify financials to ensure compliance. Then we can have government or regulators. Government or regulators will also verify financials to ensure compliance. So government or regulators perform almost a similar work like, how do we call them? External auditors, right? Or independent auditors. Then we have financial intermediaries. Financial intermediaries, or what we refer to as information analysts or financial analysts. Right. So for financial intermediary or financial analyst, their role will be to analyze financial statement and then give advice or provide advice, provide interpretation on the financials. Right. So the role of a financial analyst will be to perform an analysis on the financials and then give or provide an interpretation on the analysis that they have generated. All right. Then we have users. The question asks for 4. This is the fifth one, users. Users also perform similar work like the analyst. Users would also analyze the financials, but will take decision with it, or they would act on the analysis that they have generated, right? So this evening, we may have to take a position, whether you want to be a user of a financial statement who will perform an analysis with your statement, or you would be a financial analyst who would also want to analyze the firm's financials and then give advice. That's the road that we are taking today. So you have to take one. I don't know which position you are taking. Ernestina Ahin, which position do you want to take? Do you want to go the way of an analyst or you want to go the way of a user? Yes. Ernestina, which position do you want to take? Okay, so Ernestina, I can't hear you. All right. So financial analysis will be an interpretation of the financial information available to us, especially for us that we're going to write a paper. We will be given some financial information, and then based on the financial information, we need to provide an analysis of it. But what are the tools available to us? What are the tools available to us? Let's first start with the financials that are available to us. So we have two key financials that we may use them for the analysis. We would use statement of financial position, aka balance sheet. The second statement that we'll be using is income statement. Which is also known as statement of profit or loss and other comprehensive income. Statement of profit or loss and other comprehensive income. These are the two key statements that we'll be using in performing the analysis. The tools that we would use in performing the analysis are three, right? The tools that we're going to use in performing the analysis will be three. We likely to use horizontal analysis. We're going to use vertical analysis. Interesting. And then the last two will be ratios. Okay. So with the use of these two statements up here, we are able to use these three tools to perform some kind of analysis. Right. Okay. How do we do a horizontal analysis? A very simple way. Horizontal analysis would want to note the growth in the performance of the items that exist on the face of the financials. We want to note out growth in the firm's performance over a 2-year period, right? We want to note out growth in the firm's performance over a 2-year period. So if we are given 2024, 2023, we can note out the growth in the performance of the firm in 2024, right? Hence, 2023 becomes a benchmark of 2024, right? So every figure in 2023 becomes 100%. Out of it, we want to see growth, whether the items grew positively or negatively. I'm talking about items. Which items am I talking about? Let me quickly show you the financials. Those of you who have chanced on firms' financials before, farewell, you can pick them. If you have some around you, you can take it. But have a look at this one. Have a look at this one. Okay. So this is a typical financial statement for Benzo Oil Palm Plantation. This statement belongs to Benso Oil Palm Plantation. Look at the first heading, statement of profit or loss and other comprehensive income for the year ended 31st December 2021-2020, right? So this statement gives out 2 different years. And then we can use these 2 years to do a horizontal analysis, noting out growth in the items that exist on the face of this report, right? Noting out growth that exists on the face of this report. And then let's note that growth can be positive or negative, right? You can have a positive growth and a negative growth. So we can note out the growth in revenue. We can note out growth in cost of sales. We can note out growth in all the items that exist on the face of the statement of statement of profit or loss, right? All right, let's look at the other statement, which is the balance sheet. Other statement, which is the balance sheet. Have a look at this one too. Statement of financial position. The statement of financial position also has some details. It has your asset, your liability, and your equity, right? That's the accounting equation, if you remember. That's the balance sheet, if you remember, right? So we can also tend to look at growth in our balance sheet items, right? So if you want to note out growth in, say, non-current assets, which is one component of our assets. We have 2 key components of assets, non-current and then current. So one example of a non-current asset is property, plant, and equipment, right? On this financial, one example is property, plant, and equipment. So if you want to know how much property, plant, and equipment grew from 2020 to 2021, then we may have to use horizontal analysis. Okay, once we've spoken about horizontal analysis at length, let's look at the formula that is common for use or that is easy to use. For our horizontal analysis, I'm even sure that in your economics class, you've considered it. I think your formula for inflation also will be the same thing that I'm going to write for you. Who remembers the inflation formula? CPI of the previous year taken from CPI of the current year. Yes, okay, Samuel, go on.
You have current period minus base period divided by base period times 100%.
Okay, okay. As soon as we talk about base period, then it means we are moving a bit ahead of horizontal analysis, right? But fine, I'll come back with that. So current year, according to Sammy, current year, I think it would be nice if I use this. Yes. Oh, like seriously. Mhm. Current year minus, I will call it previous year. Previous year divided by previous year times 100. All right. Give me a second. Okay, so welcome back. So current year minus previous year, previous is a bit scary. Times 100. So if we note out from the statement, this becomes our current year, right? This becomes our current year, and then this becomes our previous year. So if we pick the figures for 2021, we will take out 2020 from it, and then divide it by 2020. So sorry. I've had a lot of distractions today. All right. Okay. So let's pick out some few elements on the statement of profit or loss and other comprehensive income, and then try to compute them and then see how it will turn out. Right. So let's go up a bit. I've shared this question with you. I think I did share it on Sunday. So it's on your platform. You can have a look at it. I'm not answering the questions beneath it. I'm only using the statements for understanding. We would address the question later. So take note. Okay. So let's seem to do a horizontal analysis for revenue. Let's seem to do a horizontal analysis for revenue. Okay. Let me label this as 1. Let me label this as 2. Okay. So the current year, 2021 figures are 214,175 minus the previous year. Take note, I'm using these figures. This is the current year figure. This is it, right? And then this is the previous year figure. So minus 123,817 divided with 123,817. All right, times 100. Is that not? Okay. So what do we get if we have to do revenue, horizontal analysis on revenue? What do you get? Yes.
A moment,
All right.
the thing is small. I'm not even seeing it. Okay, 175 minus 1, 2, 3, 817 times 100, right?
Yes, please.
$72.97.
Okay, 72.97%.
Yeah.
All right. So it means we can also work out growth in the other element. But what does this mean? 72.97% means that revenue in 2021 grew by 72%, approximately 73%. Right. What this suggests is that revenue, the firm's revenue is the monies that you generate from your sale, right? Revenue is the monies that you generate from your sale. So in 2021, your revenue grew by 72.97%. That is what it means. As simple as that. Okay, let's look at cost of sale. Is there any question? Let's look at cost of sales.
Sir, to be precise, is 98.
98. Okay, Sammy, your hand is up.
So, sir, so the 72.98%, Is it growth in 2021 or growth in 2022? Let
That's
me be sure.
growth in 2021. We are looking at 2021 as against 2020, right? So the revenue that the firm generated in 2021 grew at 72.98%, right? As against the previous year. Is that okay? We don't have 2022 figures yet, so we cannot talk about 2022.
Oh,
Is that okay?
I'm looking on the wrong distance. Sorry.
Okay. Okay. So check the platform. I've shared this question there. I think I did on Sunday, right? There are, I think for some years now, this question has repeatedly come, but the statements keep changing. So if you don't take care, you think that every year is the same thing. No. This year, I'm sure it will be the same financials, and then maybe you would have 2024, 2025. Maybe that's what you're going to get. Or I'll have to take my time and check. Okay. But that's it. Okay. Let's look at cost of sales. If we pick up on cost of sales, what are the cost of sales figure for 2021? Current year. The current year cost of sales figure is what? Let me see if you are following. Cost of sales current year.
It's 101
101
397
397 minus
is 84
84
940
94.
940
We divide that with
84
940.
940
We multiply that with 100.
100.
All right. Someone will say, but why don't we put them in brackets? No, we pick the figures as they are. You don't put the figures in bracket. We pick them as they are. You pick the absolute figure, except when you have a negative profit. If you have a negative profit, then you would work with the negative profit. But for the rest of the items, they are all going to be in their approximate manner. We don't pick the negative, or we don't pick them from the bracket. We don't pick them in brackets, sorry. Okay. I hope that's okay. So what do we get with this?
19.37.
So this is equal to 19.37. Okay. 19.3. As simple as that. We're saying that whilst the firm's revenue grew at 72.98%, its cost of sales also grew at approximately 19%, right? So whilst the revenue grew so high, more than 50%, the cost of sales, the cost that was incurred in generating the sales, the direct cost that we generated, the direct cost that we incurred grew just around 20%, just somewhere below 20%. And that's a good sign. If you can incur a growth of 20%, less than 20%, to generate a higher return of about 70%, then it's a good sign. Cost of sales is a direct cost. Direct cost that you incur in selling. We're not talking about operating expenses. The cost that you incur in getting the items that you sell at a sellable condition, right? So if that cost is increasing by or growing at less than 20%, but your revenue is able to grow at more than 70%, then it's a good sign. Then it's a good sign, right? Okay. Then we can go on and then also compute the other items, but let's jump some of them and pick up on some relevant ones. We can make a case for profit for the year. There are other items that you can think of, but let's make a case for, okay, let's do admin expenses. Okay. So for admin expenses, what is the current year figures? The current year figure for admin expenses, administrative expenses.
14.
I need you to note where the figures are being picked from.
14943.
943 minus the previous year figures.
11727.
11727
7.
divided with 1177
11.
times
No, 11.7. It's not 11.77. No.
11727 or
I thought you said 11. Yes.
sometimes I'll be
I
saying
didn't hear the.
and then we'll be writing something different. Forgive me. Okay. So what do we get, John?
27.42.
27.42. I hope you guys are doing this on your calculators. But does this come in exam alone?
Yes.
Not really. The horizontal analysis that we are learning now doesn't really come in exam.
Sir, it's rather negative 83.43.
That's Cletus for you.
It's 27 point.
Cletus, how did you get your negative something?
Negative. we are dead.
Cletus, tell us how you got your negative number so that we can help you to be on the same path with us. Right. So Cletus, all what we've done is we've picked up on 14,943. It's a big money. Look at there are 3 zeros here. So I think about 14 million because we have held up to 3 zeros.
I'm sorry, I messed up. I'm sorry.
Okay, thank you. Who was also in Cletus' situation? Who was also getting different figures? We need to help you out so that we can all be on the same path. All right. Okay, I think we are good. So we can go on and then do maybe profit for the year. Profit for the year. This is coming in the exam, so we are doing this fast. Profit for the year. Okay. So help me note out the figures. Profit for the year.
92. 423.
92,423. Minus
Yes. Minus 24.
24.
697. Yes.
Okay. So for those of you who are missing out on where the figures are being picked from, this is profit for the year. This is a profit for the year. This is where we are picking the figures from. Here, this guy. These are the figures that we have picked. All right. So let's get back here. We need to divide this by the previous year's something. Okay. So 2, 4, 6, 9, 7. We multiply that with 100. I don't know. Okay. So you give us our figures and let's see. What are we getting here?
274.
274.23.
274.23. Hey, that's huge. So what this is indicating is that the firm's profit in 2025 grew by more than 200%. Right? And that's a good sign. I'm sure when we had gone through the rest of the items, you would have seen that maybe the other expenses, other operating expenses all grew, but at a very negligible percentages. Right? Okay.
Yeah.
Everything will seem clear when we come to the ratio analysis. Okay. We can also pick the other statement, the financial position. we can pick the financial position and still do the same kind of analysis that we are doing. This item grew by this from the previous year. It grew at this rate from the previous year. Maybe if you pick up on PPE, property, plant, and equipment, it grew at 15%. If you pick, I'm just giving hypothetical figures, not the actual. If you pick inventory grew by maybe a certain, that's what we are doing. This is a very surface level analysis, a class 2 level analysis, is that not? So let's see if we can also pick up on vertical analysis. Yes, Rahinatu.
Good evening.
Yeah, good evening.
Yeah, I have a so in case we're trying to get the percentage change when the changes or the growth in the various indicators. So in case during exams, instead of going through this way, trying to take it one after the other. So I just come in there because I have 2021 and 2022. So I'll just make percentage change in this one and just use my calculator, punch the changes and put it by 8. If I have any analysis to do, and I'll go ahead and do the analysis, will I be penalized for that?
No, not at all. Not at all. So in exam, you may just have to show 1 or 2 workings. So 1, 2, 3 workings. The rest you can just use your calculator to generate them. Raina, is it okay?
Yeah, that's okay. Thank you. So that you can save some time.
Exactly. This is just for 30 marks. But usually for horizontal analysis, well, let's go. It's not yet exam. I'll tell you some other stuff. Okay. So we can pick up on vertical analysis. We can pick up on vertical analysis. For vertical analysis, we looking at different formulas for the different financials that we have had, right? We want to note out percentage change in the item or percentage growth in the items that exist also on the financials. But here, we're looking at it from the year under consideration. So if we pick up on vertical analysis, the other name for vertical analysis is called common size. Common size. Please take note of this name. Common size analysis. This name that I've mentioned is very important. Common size analysis. Right. For vertical analysis, we're going to look out for a common item which is relevant to the rest of the item that exists on each of the statements. Right. And then note out how that item has contributed to the rest of the other items or the rest of the item that exists. So for income statement or statement of profit or loss, for statement of profit or loss, its relevant item will be revenue. It is out of revenue that we are able to pay cost of sales. It is out of revenue that we are able to generate our gross profit. It is out of revenue that we can pay administrative expenses. It is out of our revenue that we can say that we generated a net profit. It is out of our revenue that we can even pay taxes, right? So we're going to look at revenue as the benchmark item, as the relevant item, of which maybe percentages has been spent on cost of sales, percentages has been kept as gross profit, percentages of which have been kept or spent on administrative expenses, right? And the other elements that exist. Okay, so let's see. We're going to say that if you're picking up on statement of profit or loss, the formula that we're going to use will be each of the items, each of the items. You see, we have a lot of items. Raina, your hand has been up. Right, so put it down. Okay, forgive me. So each of the items or each item divided by revenue. How do we spell revenue? times 100. All right. So this will be the formula that we're going to use for statement of profit or loss. Statement of profit or loss. All right. When we get to statement of financial position, it may change a little. This formula that you see here may change a little. The reason is that we don't have how. Sorry. Sometimes I want the formula to look a bit good. Why is this not fitting? Okay. All right. I think this is nicer. Then it means this guy has to go. All right. Each item divided by revenue times 100. If we go to the financial position, we don't have revenue there. So the formula may sway a little. So let's take time and then understand the formula in quest of the financial for a profit or loss. So for profit or loss, we can do a common size analysis for all the items that exist here, from revenue up to total comprehensive income. But unlike horizontal analysis that we did for, you see, for horizontal analysis, we can only see growth in the items for just a year. But if we come to vertical analysis or common size analysis, we can work out for 2021 separately from 2020. So let's see how it's going to show up. Let's see how it's going to show up. Let's put here 2021. And then go and put here 2020. Okay. The first item that we want to pick is revenue. Don't be disturbed that I'm picking revenue, because it's also an item on the profit or loss. So each item, I'm picking revenue first. So revenue is equal to, what is the revenue figure for 2021? Revenue for 2021. I think I have it here. Isaac, just use it. Revenue for 2021. Go ahead. You want to mention it?
214.
Okay. 214. Let me put it up here. 214. 175. By 214. 175 times 100. Is that not? So what are we generating for 2021? 100%. Is that okay? Then we can also work out for 2020. What are the figures for 2020? The revenue for 2020 is 123,817.
817.
Divided by 123,817 times also 100. And that would also give us 100%. As simple as that. Right. Okay. Hey, Isaac, but you forgot the percentage sign. Okay, we can put the percentage sign beneath. We can just, yes, Rihanna.
Yeah, sorry to take you back. I know for the vertical analysis, I know the SO, the PL is profit and loss. What about the SO? What does it stand for?
Oh, SO here is statement of profit or loss. So it's this. Sorry, I'm just shortening stuff. Statement of profit or loss. Is it okay?
Thank you. You know, I joined late, so sorry. That's why I had to apologize for taking. Okay, thank you.
You don't need to apologize. Well, okay, you need to apologize to your colleagues. But for me, I'm okay. All right. What did I write here? I want to write percentage. You see? Okay. Let's continue. At this point, we want to pick up on cost of sales. Cost of sales. So cost of sales cost of sales for 2021 is equal to what? Cost of sales for 2021 is what?
101. 397.
397.
Mm,
397 divided by
the same number.
Are you sure?
No, revenue.
This is the formula. It is
Revenue.
divided by revenue.
Revenue amount.
Divided by revenue times 100. Is that not
Yes.
Yeah.
okay? So what do we get for 2021? I do ya menko use. I would ya menko in fi hana men pep baby from Fambrana. We dear ya mam cram and just okay. Let me put it up here. Oh, I'll grab the engine. I'll call her. Okay.
It's 7.34.
Okay. You said you had what?
47.
47.34%.
34%. The percent is up there already, so we're going to keep it up. Okay. Then 2020, what do we have? What are the figures? We are using 2020 figures. So you have to make sure that you are speaking from 2021. Sorry, 2020. Don't come and use 2021 figures. If you mess them up, your answers will be wrong, right? If you make them up, your answers will be wrong. So what I'm saying is that now we want to compute cost of sales, common size statement or common size analysis for cost of sales in 2020. We just finished with 2021. So the figures for 2020 will be 84,940
940.
divided by
You
Divided-
guess 9.
1, 2, 3.
divided by 1, 2, 3. Please take note. We are dividing by 1, 2, 3. If you make that mistake and come and divide it by 214,175, you are wrong, right? So you may have to stick to the figure. So what I advise is that in context of exam, you may have to try and generate all the 2021 first before you would come and pick up on 2020 figures, right? So that you don't make any mistake whatsoever. Okay. So what do we get? I overheard someone mention the answer.
68.6.
58.60.
0%.
58.60. Okay.
68.
68.
68. Kafra. Hey. Okay. So that is it. That is it. It's very, very simple. Is that not? It's very, very simple. So we can go ahead and then pick up on maybe the next item, which is net gains from changes in fair value of biological asset. That's a long name. So you just let's pick up a short name for it. Net gains of biological asset. BA is not Brong-Ahafo region. It's biological asset, right? Okay. So let's see if we can also compute that. Okay. So net gains for 2021 is 2. I'm picking it from here. 2684. 2684. 2684 divided by 2021 revenue. Oh, which is 214.
So you get 214,175.
6.
The answer 1.25%.
Okay. The answer is 1.25%. 0.25%. All right. That's good. That's good. Okay. Then we can do for 2020 biological asset. We can work for 2020. We have 84 divided with 84,940 times 100. What do we get here also?
0.07.
0.07%. All right.
Not 0.09.
You made a mistake by dividing it by 84,940 instead of 123.
123.
Yes,
Ah.
817.
Thank you. So it should be 1, 2, 3.
817.
You see, I'm making mistakes. 817. All right. Thank you. Okay. So you see what we are doing? We can go on and on and on and on, and then do everything. Who cannot do this calculation up to profit for the year? Who cannot do that? This thing that you need to just pick the figure, divide it with revenue, pick the figure, divide with revenue. Is it too difficult? I think the difficulty lies in how to identify the figures, right? And then how to identify the figures to, of course, if you come to this statement, you just pick revenue, you open your eyes. If you open your eyes and it becomes so disturbing, you can just use your ruler, right? And then you can use the ruler to trace the figures so that you don't make mistake and go and pick another figure. But this is easy. You pick the figure, you put it in the formula. If you get your formula right, working is not difficult. Just as Rihanna would ask, must you work out everything in the exam? No, right? You may have to work just a few. However, if there is a question requesting that you work out everything, then you need to work out everything. Okay, let me go and show you a certain question. And these very questions that we are looking at. Don't be so disturbed. Look at something here. The question here says that translate the statement of profit or loss and other comprehensive income into common size statement. Do you remember common size analysis? Does it sound different from common size statement? It's the same. So in this quest, the examiner was asking you to perform a common size analysis with your income statement or your statement of profit or loss and other comprehensive income. So because it's a specific question, you may have to work out everything from revenue to the last item on that list of statements, right? This was a specific question that you should translate a certain statement into a common size statement. Yes, Rihanna, your hand came up.
Okay, please, is it also okay, like, you know, the way you are working and then you are putting the figures, like, it's some kind of, it doesn't look nice. So if I decide to name here workings and I'll go and do 2021, 2022, if I'll work and come and put it here, come and put it here, and then I have the table form come out with these things. Like for revenue, you have 100 over 100. I have the working separated. Now arrange it that way. Will I be penalized?
If that will not waste your time, why not? But it would waste a lot of time. It would waste a lot of time. So what I say usually is that you can just work out one or two things. Show the working on the list. I wish I would have had a very good outlook with this. I don't know why my outlook isn't looking nice. It's not looking nice at all. I wish it would show out properly. But it is what it is. And see, mobile fun is if you are going forward, I'll try and do it well. Okay. But in Canadian, say you would work out revenue. Revenue, it's not really difficult to work it. Anything divided by itself times 100 is 100, right? So you can even close your eyes and write it. And then go ahead and work out your cost of sales for 2021. The rest, you can use your calculator to generate them. right? The rest, you can use your calculator to generate them. So if you want to generate items for 2021, you just pick your calculator and then enter the fraction sign on your calculator. If you enter the fraction sign, you keep the denominator intact. You keep the denominator intact, and then you keep changing the numerator. I don't know if you can understand what I'm saying. I don't have a calculator here to show. Your colleagues that I met them on Sunday, I tried to show them, right? You can pick the fraction sign on your calculator. If you look on your calculator, just beneath the Kaku, is it calculate or Kaku? CALC on your calculator on the right left-hand side, just beneath it, you could see a box divided by another box. You can pick that sign on your calculator. Then you would maintain the box beneath. You would maintain, if you are working for 2021, you maintain 21,400 and is it 21,000? 214,175, 214,175. You can maintain this beneath, and then you will keep changing the numerators to suit the items that you are picking, right? So if you pick cost of sales, you just put 101,397 as a numerator. You multiply by 100, you are good to go. If you get to gross profit, you pick this figure as the numerator. If you get to profit for the year, you pick this figure as the numerator. The denominator will be the same. So you can beat some time. Rihanna, is it okay? So you don't go and compute it elsewhere, but you try to maintain it in a statement form. You try to maintain it in a state. So you would have 2021 here, 2020 here, and then you would have list the items nicely to show under the years. Is that okay? Yeah, Vivian.
Please, the question you just showed,
Okay.
the year was not given. So does that mean we are going to do for both years?
Exactly. I think that the person mentioned it too. Let's go and see.
Okay, then I didn't see that.
For both years, look at it. Translate the statement of profit or loss and other comprehensive income into a common size statement for both years. Right?
Oh, okay.
Both years.
Okay.
Yeah. And that will be for 7 marks. So if
okay.
If you shorthand the items, it means you won't fetch all your 7 marks. John, let me pick it from you and we continue.
I heard the 7 marks. It's not enough. You do all and you get just 7 marks.
John say we want me bet you man so one na me dear me na me yeah.
I'm surprised though.
I'm not the examiner.
So I don't know, Mr. Joy, Mr. Jose is fighting a lose.
All right, so John, I've not done anything. But it's easy. It's easy. I think it's because we are learning this for the first time. If you go by the approach that I'm using, I was telling you, you wouldn't spend more than 5 minutes to do this, right? You wouldn't spend more than 5 minutes to work this out. So as we practice, I think we'll become perfect. As we practice, we'll become perfect. I wish we can use Excel to generate it. If we are using Excel, we would have had a very nice outlook, and then we would also have we have gone a bit faster than this. But well, we are learning for understanding. So okay. Now we can go ahead and let's do for gross profit. Let's work this out for gross profit. Okay. So for gross profit, what are the figures for 2021?
115.
115.
462.
462 divided with 214
Revenue 214
times
1700.
Okay. What are we getting?
53.91.
53.91. Okay. The figures for 2020, gross profit is 38,961 divided by 123,817 times 100. Okay.
31.47.
31.47. All right. This is looking a bit okay. Okay, let me see if I can sweep this out. Okay. Cost of sales. Okay. All right. I think this one will look a bit nicer than. I just wanted to maintain a nice outlook, just like Rihanna would prefer. Okay. Rihanna, this is a bit nicer, right? So now let's seem to do some analysis here. In 2021, the firm had a revenue of 100%, right? Out of the 100% revenue, they spent 47% of it on cost of sales, right? Out of 100% revenue, the firm spent 47.34% on cost of sales and retained a gross profit of 53.91% in 2021. Okay, let's pick it from the bottom. I've not mentioned the net gains. In 2021, the firm was able to retain approximately 54% of its revenue as gross profit after spending 47.34% on cost of sales. Right? Compared to the past year, where they maintained or where they kept only 31.47% as gross profit after spending so much of about 68.6% of its total revenue on cost of sales. You see, this analysis sounds a bit better and nicer than the horizontal analysis. Is that not? At least you can do some good comparison. Let me pick it again. In 2021, from the data, in 2021, the firm seemed to have kept 53.91% of its total revenue as gross profit after spending 47.34% on cost of sales, compared to the past year where they kept just about 31.47% of its total revenue on, compared to the past year where they kept just about 31.47% of its total revenue as gross profit, having spent 46.6% of its total revenue on cost of sales. Right? I've said plenty stuff, but all what I'm trying to communicate is that in 2021, the firm kept a higher gross profit than in the past year. Right? In 2021, the firm kept a higher gross profit than in the past year. Is that okay? So someone will say that whilst the firm was able to keep 53.91% of its total revenue as gross profit in 2021, which is higher than the past year, which retained only 31.47%. 31.47%. Right.
There is 31.46.
Is it 46? Which number comes after the 6?
6.
So mention the answer that you generate when you divide this.
31.4665.
So if you
999.
let me show you 41.66 like this, and then what again?
5.
5. This is the answer that you got, or something is
Yes.
okay. So if you get an answer of this sort and you are maintaining a 2 decimal place, if you keep your answers in 2 decimal places, this will be a 2 decimal place. After the decimal point, the figures that should follow should be 2. So these 2 figures, if the third figure is higher than 4, you would run it up. If the next figure, after these 2 items, is higher than 4, you will run it up. If it's 4 and below, you will run it down. So if this was 4, if this figure was 4, then it would have been 31.46%. But because it's more than 4, we would run it up. So we would move 1 from here to add to this. That's why your colleagues mentioned 47.
Very well.
All right.
Very well.
Okay. So what are we saying? We're saying that in 2021, the firm was able to maintain a gross profit of 43.91% compared to the past year where they kept just about 31.47%, right? With an indication that the current year performs better with gross profit maintenance than the past year. The reason why the current year performs better with gross profit maintenance is because they spent less or lesser on cost of sales. Someone will say that the reason why gross profit performs better in 2021 is because the firm seemed to be managing down their cost of sales, right? Okay, let's try to put down something. Maybe that would help you. Okay. So from the computation, we can explain.
So you said from the
computation.
Okay.
From our workings, from the workings, we can explain that the firm in this quest is BOPP, Benzo Oil Palm Plantation, was able to retain. So I've used several words in place of this retain. So remember, the firm was able to retain, the firm was able to keep 53.91% of its total revenue as gross profit in 2021 compared to 31.47% in 2020. This may seem that the current year performs better than the past year. Why are we making this strong claim? Or can you explain why you are making this strong claim that 2021 performed better than 2020? Or what is accounting for the best performance in 2021? You need to add that analysis to it. What is accounting for the best performance, or what is accounting for, what is contributing to the reasons that 2021 performed better with gross profit than the past year? Right. So the good performance, I am writing plenty grammar. I'm writing plenty grammar, but you can look at this in a very nice way to put it. The good performance of the current year can be linked to, can be explained from, can be related to, right? Can be explained.
Sam lost.
Oh, all what I'm doing is I'm just trying to explain all this information that I have, right? I'm trying to explain gross profit. I'm trying to explain gross profit. Right.
Oh, okay.
So I'm explaining the
Okay.
What do we mean by 53% of gross profit? 53% of gross profit means the firm retained 53% of its revenue. Revenue na we were able to retain 53% after spending 47% of it on cost of sales. And then we are trying to make a good analysis out of it. The analysis thereon is that the firm performed better in 2021 with gross profit maintenance than the past year. Why are we saying that 2021 performed better? Right? So we need to give a basis. Why? Why are we saying that 53% is a good performance? It's a good performance because we saw the firm managing down their cost of sales. And that's what I'm adding up to this. Right? Is it better?
Yes, sir.
So the good performance of the current year can be, I think there should be BA here, can be explained
Chief, can we also say it can also be related to the firm's ability to cut down cost of sales?
That's the same thing I'm going to write, but in a different way, that the firm was able to manage down their costs. Managing down your costs, Sammy, means you cut down your spending on cost of sales. Is that not true?
Okay, sure.
I'm writing plenty grammar. From 68.60% in 2020 to 47.34% in 2021. That's all. This can be a way of analysis. And interestingly, in this question, that is the second requirement. I can show you right away. That's the second requirement. Let's go and see
it.
Comfort, you are fine. So look at it. Look at the second requirement from the results of the common size statement in A above. explain the gross profit as a percentage of the base figure for both years and benchmark these results with the industry averages for 4 marks, right? So all what the question is requesting is to explain gross profit as a benchmark of the base figure. Which one is the base figure? The base figure is the denominator, the revenue. So explain gross profit as a benchmark of the base figure. So out of 100% revenue, we kept 53.91% as gross profit in the current year compared with the past year where we kept only about 31.47%, which suggests that the current year performs better in gross profit maintenance than the past year. We can relate the best performance of 2021 from facts that the firm was able to cut down spending on cost of sales from 68.6% in the past year to 47.34% in the current year. I've not said anything. I just spoke the figures. I've just spoken the figures. That's all. Right? I just spoke with the percentages that we have here. Is that not Sammy? Or, okay. John. Cletus.
It's
yes.
Simple. It's simple. Yes. It's not in as compared to the calculation. Because if you are able to do the calculation, you understand the trend, you'll be able to know that maybe this current year, the performance of the firm is far better in percentage-wise, maybe reducing the costs and maybe increasing the revenue. So I think the computation will help you to analyze it well.
Okay. All right. So, in fact, we are not answering these questions. We are not answering. We are just learning. We're learning how to perform analysis. After computing some figures, how we are able to interpret it. That's what we are trying to do here. We aren't answering the question down there. Right. So take note. All right. Okay.
Yeah, so Chief.
Yes.
So does operating profit means gross profit or it's something else?
Operating profit differs from gross profit. Operating profit is profit that we generate after deducting all our administrative expenses, all our distribution expenses. Okay. So salary, stuff like that, they are administrative. So you see, on the income statement, we have 4 key elements. No, let me call it 2 key elements that give birth to profit. On the income statement, on the statement of profit or loss, there are 2 key elements that give birth to profit. It's income minus expenses. But income is divided into 2. Income is divided into direct income and then indirect income. Then expenses is also divided into direct expenses and indirect expenses, right? So an example of a direct income is revenue. An example of indirect income is net gain. Net gain is an indirect income. Another indirect income is other incomes, right? If we also pick up on the side of the expenses, one key direct expense is cost of sales. The rest are all indirect expenses. So if you take out all your indirect expenses from your gross profit, we are generating profit, operating profit. But usually some firms would want to categorize some of the expenses a bit. They want to know profit before tax, profit after tax, profit before interest and tax, stuff like that. So they tend to segregate the statements based on, I think, the industry and then the requirement that the industry comes with. But broadly, these are the key things. Direct income, indirect income. Match direct income with direct expenses. And then we add indirect income to whatever that you generate. And then we subtract indirect expenses. That's all. That's how we prepare financial statement. Right? Especially for profit or loss.
Oh, okay.
You get it. So for our operating profit, the examiner going forward, maybe in the coming exam, the examiner can ask you to explain your operating profit. Is that okay? The examiner can ask you to explain operating profit. Yes. So sorry. Okay. So what I'm saying here is that we are not limiting ourselves to just the computation of revenue to gross profit. We can go on, work out for admin expenses, just like we did up there, right? So we can do admin expenses. We can go on and do for other incomes. We can do for operating profit. We can do for profit for the
The
year.
line is breaking.
Oh, so sad. Is it better now?
Yeah, it's better. I think he might check his side.
Okay.
So you're flowing here.
Okay. So what I'm saying is we can go on and on and on and compute all of these and then still be able to perform a good analysis. Especially we can generate up to profit for the year. And then if we do up to profit for the year, we can get a very good analysis, better than what we just did, right? Because at profit for the year, we're able to say that maybe the firm performed better in 2021 or 2020, right? It could even mean that 2020 performed better than 2021, even though for gross profit percentage, we are seeing a better performance in 2021. But after going through everything, maybe things can change, right? You can have a better look at the firm's performance and then other things that will contribute to the good performance or otherwise, right? So that is what we have. Let's make a step and then consider financial position. This is for profit or loss. So we can also look at vertical analysis for statement of financial position. Okay. So if we pick up on statement of financial position, the formula will change a bit. The formula will change a bit. The formula will then be each item, the same element, right? Each item, but because we don't have revenue on that list, the denominator will be the relevant item on the financial position. The relevant item there will be total asset. Total asset. Right? So it is out of our total assets that we can have the rest of the other elements. Look at it. So total asset, it's asset that the firm is using to trade, right? Your asset supports the business, or it is out of your asset that you are trading. So we want to know component of your assets that probably came from third parties, component of your assets that came from shareholders. And then even with those elements, we can look at individual items and the liability that contributed to your assets. We can look at individual items of your assets that is forming part of the total assets. So we could note how much of your investment in assets are in property, plant, and equipment in terms of percentage. How much of your assets are in inventory? What percentage of your assets are in inventory? What percentage of your assets are in cash and cash equivalents, right? So for each items, we can pick up on a lot of items here and then note out how they contribute to your total assets. Let's quickly pick up on one item from each subheading. One item from each subheading, and then see if we can understand something better before we move to ratios. Hey, you bet me your ratios and your okay, we will try. It's still 8 something. Okay, so first, we are moving to the second statement. All of you move the statement of financial position. Quick. This is our total assets. Those of you who are looking for total assets, this is total assets, right? So that's what we are going to use as the denominator. So take a look at it. Take a look at it. This one, we are using this figure, total asset. Those of you who are looking for it, it's here. All right. So let's come back here. The first thing that we want to pick under statement of financial position is property, plant and equipment, PPE, property, plant and equipment. So for our PPE, I think it would be best we put down the years under consideration. 2021. 2020. All right. So PPE, help me go pick up the PPE. PPE is a 6, 4.
Hey.
Are you with me? I'm writing some stuff. Comfort, you are fine? Okay. 64417, right? Divided with,
Yes.
what is the PPE? Sorry, what's the total asset for 2021?
223.
223 123.
123.
Okay. Times 100. Times 100.
28.87.
So I'm hearing a lot of figures.
28.87.
28.87. Okay. So out of 100% total asset, out of your 100% assets, total assets, you have 28.87 of it in property, plant, and equipment, right? Your total investment in asset, 28, almost 29% of it are in property, plant, and equipment, right? So this would help you to form a good decision on how to spread out your investment. And of course, if an item is not bringing better contribution, then you would decide whether to let it out or maybe park it somewhere so that you wouldn't incur costs on it again. And then all these will play out better. All these analysis that we are doing will play out better when we start the performance of the ratios. If we pick up on the ratios, everything will play out better in our years. Okay, let's pick up on the next item. I won't do for 2020, but let's pick up on the next item. I want us to do inventory. Inventory. How do we spell inventory? Inventory. Or they said inventories. Okay, so inventories. Let's use inventories. So this is an O. All right. So inventories. What do we have for inventory 2021? What inventory did we keep? 13. This is inventory. Those of you who are looking for inventory, this is it. This is inventory.
13.
This is inventory. Inventory. Ibiana mensan, but me pese wo say we na inventory no. No adana cry we are na I will. Hey. Okay. Let's go. 13,248 divided by total asset. Total asset is 223,123 times 100. All right. Okay, so let's continue. So don't be surprised if you get a visitor in the class, right? Today it's been a disturbing moment. Okay. What do we get?
$5.93.
5.93.
94.
94. Okay. Precious. Precious. Precious, are we good to go? Okay. Since Precious,
Yes.
it means we can work out for trade and other receivable. We can work out for cash and cash equivalents. We can work out for the other elements, right? But let's pick one extra item and then we continue. So trade, we are doing trade and other payable. Trade and other payable. Let's just call it trade payable. Trade payables. Okay, so trade payable, I mean this guy, trade another payable. Very relevant. So, okay.
Trade.
I think there are other payables there, but we want to focus on trade payable. Trade another pay. I think this is dividend payable. Okay. So give me the figures. 17 something
17155.
divided by 22
31
31
3 23.
100 times 100. Okay. So what do we get?
7.69.
7.69. All right, percent. The percent is up there. So we can go ahead and then do the rest. That comes under it. And then even jump to come and do these ones and come and do stated capital and all. Right. Stated capital is usually maintained at one element. I mean, you don't increase it or reduce it. So from here, the next best thing to work out for will be your retained earning. Retained earning. Then at least for this one, we've been able to work out from, yes, Precious, your hand came up again.
Yes, please. With the trade payable, why didn't we divide it by the total liability, but we divided it by the total assets?
Precious, your line gave us an echo, but it's fine. We said that we want to go by a certain formula which picks up on each item divided by a total asset. So total asset becomes the benchmark figure. The total liability that you are talking about, they all form part of your asset, right? When these people made a contribution, their contribution got to the hand of the firm, and then the firm is using it, right? So total asset becomes the key item, i.e., if you don't want to use total asset, the next item that you can use is rather total equity and liability, which would be this. But the two are the same. It would have been, so it's either you are using your total equity and liability as the benchmark, or you are using your total assets. But commonly, we use total assets. Did you get it? So you cannot divide your trade payable by your total liability. That's not the formula. It won't give you the good view. You won't have a good perspective of what you want to do. Unless maybe you want to know the contribution of your trade and other payable that form part of your total liabilities. But I explained that from the statement of financial position, you want to know the contribution of each and every other item that forms part of your total assets. And then it's the assets that the business is running with, right? It's the assets that the business is running with. That's why we need to know, right? Precious. Okay, I saw another hand.
Yeah, hello.
Yeah, Rihanna.
Please, I have a question.
Go ahead.
Yeah, please, is it also possible if you want to know the percentage of your total liabilities that are in trade payables?
Yeah.
So instead of you dividing it by the total assets, you rather decide to divide it by total liabilities.
Well, so when doing that, you may not be doing vertical analysis. You'll be doing something different. That would be a ratio, right? Doing that would be a ratio.
Okay. Thank you.
Okay.
So that means if you are doing vertical analysis, if you identify one as the benchmark, just like the way we identify assets, you should divide all the indicators by total assets. And that would mean that you are doing vertical analysis.
Exactly. So for vertical analysis, we've been restricted to a particular formula. If you want to perform a horizontal analysis, you are restricted to a particular formula. If you want to do ratios is a bit open. Even though it's open, the examiner would also restrict you to a certain element. If not, then all of you will compute something and bring it. right? So for horizontal analysis, sorry, for vertical analysis, for financial position, the benchmark says that each and every item ought to be divided with total assets. So we can know the contribution of the item to your total asset, the contribution of that particular item to your total assets. So we want to know the contribution of things that you bought on credit. That's the trade and other payable. Things that you bought on credit. How much is it contributing to your total asset? You bought certain things to run your business with on credit. If you want to quantify it in percentages, how much is it? Right? If you want to know the employee benefits that exist with you, the employee benefit that you are still using in running your business, how much is it in terms of percentages? If you want to know the lease liability that you owe or the lease liability that you generated as part of your asset, how much is it in terms of percentage? Right. So that's what we talk about when talking about vertical analysis. Ratios will look at something different. Ratios can look at
I have another.
Okay, go ahead.
So if I want to then interpret what we've calculated, the 7.69%. So will I be wrong if I say that 7.69% of our assets are tied in trade payables?
So are tied in trade payables. Tied in trade payables. Tied in trade
in trade payables.
In trade payable too will be a bit of issue. Maybe you could say that 7% of your total assets came from trade payables, right?
Okay.
It came from them.
Okay.
Assets that you are controlling, 7.69% of it was from trade payables, right? But if you want to talk about tied up assets, we will want to talk about property, plant, and equipment. They are tied up in assets. So 28.87% of your of your assets are tied up in PPE. 5.94% are tied up in inventories, in that order, right? Okay. But these ones are very surface level analysis. All right. Let's move away from this. I had wanted us to do retained earning, but I believe we understand. So now let's move on to ratios. Financial statement analysis. We have ratios as a key element, as a key tool to perform this financial statement analysis with. Under ratios, there are 5 key ratios. Number 1, we have liquidity ratios. Liquidity ratios. Number 2, we have profitability ratio. Profitability ratios. Number 3, we have solvency ratios. Solvency ratio. Number 4, we have activity ratio. Number 5, we have investor ratio or market ratios. These items that I've written, some of them have AKEs. Liquidity doesn't have, profitability doesn't have. The rest, the other 3, they all have AKEs. For solvency, another name for solvency would be leverage ratios. Leverage. Another name for leverage and solvency ratio would be gearing ratios. Gearing. So G and ING. Gearing ratio. The last name will be financial risk ratio. Activity ratios are also referred to as asset management ratio or asset efficiency ratio. Right. And then market ratios are also referred to as investor ratios or investment ratios. All right. Let's pick up on liquidity ratio. As you see this nicely, there are 5 of them. But each of them has almost about 3 other ratios beneath. Right. Each of these elements that you see here may have other sub ratios under them. And that's where the interest come. Under liquidity, if we talk about liquidity ratio, Rihanna, your hands will pain you. This your hands, it will pain you. Is it the left hand or
It's
the
not
right?
easy.
Eh?
We will not we will not end the thing.
Okay, so liquidity ratio measures the firm's ability to pay short-term obligation, right? If you want to measure liquidity, or if you want to talk about liquidity ratios, we're saying that it measures the firm's ability to pay short-term obligation, right? What are we talking about? Are we going to meet in Christmas? Think we have to rest.
Oh, we must
You said short.
There's no rest. So since exam is ahead of us.
So we are meeting. Today's week is
Must be
24th.
24th.
No,
Carols.
next week is 24 too, so people will be at church.
I
No,
don't
we are
think
meeting live.
So
if you have management science ahead of you, you are come to write exams. Hey, can you even enjoy the Christmas? That's
But we can break for the 24th, 25th. Then we take the other ones.
don't worry, I'm sure you would arrange something for ourselves.
We need to have time for ourselves.
Okay, so liquidity ratios it measures the firm's ability to meet short-term obligations as before due. Very simple like that. So as and when it becomes necessary to pay your short-term obligation, your ability to pay for it is what we refer to as liquidity. It means if you are able to meet up your short-term obligation in time, then we are saying that you are liquid as a firm, right? So in effect, what are we trying to talk about? We're talking about the firm's ability to use their current assets to pay for their current liabilities, right? It considers
Abilities.
yeah, so it considers how the firm is able to use their current assets to cover, to pay, to offset, to meet up their short-term liabilities, right? We have three sub-ratios, right? Some sub-ratios are current ratios, quick ratios, and asset test ratio. Asset test or cash ratios. All right. So these are the three sub-ratios that I mentioned. These are the three sub-ratios and the liquidity that I mentioned. How you are able to use your current assets to meet up your current liabilities. Where do we have current assets? On this list, on this financial position, these are your current assets. These are your current assets, right? These are your current assets. How you are able to use your current assets to meet up your current liabilities. This one's your current liabilities. How you are able to use your current assets to pay your current liabilities. Let me undo a lot of things so that I would have a nice outlook here. Your ability to use this current assets These are your current assets. How are you able to use these current assets to meet up, to pay, to offset your short-term obligation? And these are your short-term obligation, your short-term liabilities. Your short-term liabilities. These are them. Is that okay? Are we good? Are we good? Are we good? Isaac, I cannot see top. All right. So our ability to use this element to pay this. Quickly, let maybe work out for one, which is the current ratio. Our time is up. Will you give me some few minutes?
Yes.
Abigail said yes. So Abigail knows I'm maybe
Like some few minutes.
Don't worry, fire.
Okay, so current ratio, the level of measurement is the overall. We do an overall measurement. So we look at the total current assets divided by your total current liability. So the formula says current assets divided by current liabilities. Okay. In fact, this is the ultimate formula. But in some books, you see that they've written is to one. And I would explain to you the is to one very soon. Okay. This is what I'm going to do to explain that to you. If you have, what is it? If we have 3, maybe 4 oranges, those are oranges. These are oranges. If they are not nice, you have to take it like that. These are oranges. These oranges are going to be shared by Cletus. This is Cletus. Look at Cletus very well. Oh, the drawing is not coming out clear. Okay. So we're sharing the oranges by 2 people. That's Cletus, and then maybe this is Comfort. This is Comfort. All right. So if we share 4 oranges by 2 people, what do we get?
2.
We would have 2 oranges going to each person. 2 oranges goes to each person. All right. This can be written as 2 divided by 1. Is that not? We can write this as 2 divided by 1. And then this 2 divided by 1, if we also want to put it in ratio form, we can see that it's 2 is 2. 2 is to 2, is to 1. So the numerator is divided by the denominator. So 2 of the oranges goes to 1 person. I want to do the is to 1, but it's not is to in. So 2 of the oranges goes to 1 person. 2 of the oranges goes to 1 person. That's what we have here. So what then that suggests is that if Cletus takes the 2 oranges and he's unable to eat all of them, he can keep 1, right, for another time. So this is how we could write the answer. 2 is to 1. Every 2 oranges go to 1 person, or
1 person.
we get 2 oranges. If you eat 1 orange as a person and you are satisfied, you bring the rest home, right? You don't continue to eat it, to waste it. So that's the same thing that we may be doing here. Plenty red inks here. Let me undo some. But I wrote the formula nicely. How come I've deleted it? So current ratio if you don't mind, I want to use CA, which is current assets, divided by CL, which is current liability, right? So that we can move fast. All right, let's come back here. What is the total current asset for 2021? Total current asset for 2021. This is it. This is the total current asset of 2021. 139,104. 139,104. So for 2021, yeah, I thought I saw a hand up. Okay, there was no hands up. There's no hands up. Isaac, no one raised the hand. Okay. For 2021, we have
139.
139.
104.
104 divided by current liability.
Current liability.
This is the total current liability.
30.
30. 36.
368.
8. This is the total current liability that we are picking for 2021. So note it out. All right. So what do we get for 2021 as our current ratio? So this will divide itself by 1, and then it will divide this guy by how much? Precious.
So 4.5.
4.55 divided by 1. Is that not?
No, 58.
4.58. 4.58 divided by
Yes.
2. Is that okay? So
Yes.
we can rewrite this as 4.58 is to 1. So that's where the is to came from. Right. So we can analyze that for every 4 cedis, 58 pesos of the CA could be used to cover 1 cedi CL. Let me come again. For every 1 cedi current liability, the firm has 48 cedis, is it 40? 4 cedis, 58 pesos in current asset to settle it. For every 1 cedi current liability, the firm has 4 cedis, 58 pesos to pay for it, suggesting that the firm can pay for the 1 cedi current liability and still be left with some surplus. Is that not? So if you go and pay, if you owe 1 cedi and you go and pay, if you have 4 cedis, 58 pesos to pay for it, if you pay, you get a change. You get a change of 3 cedis, 58 pesos. So that's how we're going to do the interpretation. For every 1 cedi current liability, the firm has 4 cedis, 58 pesos in current assets to settle it. Hence, they could settle that and still be left with some surplus, right? I.e., someone could say that, well, the firm is able to meet their short-term obligation by almost 5%, 5 times. The firm could meet their short-term obligations almost by 5 times. Almost by 5 times. It means they can pay their short-term obligation by 5 times, right? If they owe 1 cedi, they can pay it by 5 times. Meaning when they pay for 1, they will be left with some surpluses. Those who do not want to do a very extensive analysis, the firm is able to meet their short-term obligation with 4 cedis, 58 pesos. Okay, let's work out for 2020 and see if we all understand. So 49. Take note, I'm not picking the 11915. I'm not picking 119115. This is total assets. So as soon as you pick this, you are making a big mistake. We are picking 49,431. Are you still allowing me some time? We've done 8 minutes. Okay, thank you. 431 divided by the current liability for that year is 100,100,87. All right. So what do we get? What do we get?
$4.90.
4.90.
Mm-hmm.
Can we say it's is to 1? The is to 1 is coming from fact that it's divided by this, right? So the interpretation here thereon is that for every 1 cedi current liability, the firm has 4 cedis, 90 pesos in settlement of it, right? The firm has 4 cedis, 90 pesos to settle for every 1 cedi current liability. Hence, obtaining a surplus of about 3 cedis, 90 pesos, right? The firm is able to meet their short-term obligation by almost 5 times. So if you had made that generalization that they are able to meet it by 5 times, then this is 5 times, this is also 5 times. How do you play a distinction between which year performs better? So you don't do a lot of approximation. It's better you maintain a two decimal place as this. Okay. For every 1 cedi's current liability, let's try to perform an analysis with this. For every 1 Ghana cedi current liability. Meja mo ma desisi awa. Ochina kwa yen kwedwuma na ochina da ben Thursday. Ebe kwedwuma. Sorry. Current liability. The firm has 4 cedis, 58 pesos in current assets to offset it in 2021 compared with 2020 that has 4 cedis, 90 pesos to settle every 1 cedi short-term debt. In all cases, leaving some surplus, leaving some substantial surplus, right? You can add that. Okay, so that's all. We can look at the second level of ratio, which is quick ratio. Quick ratio has a school of thought, which I would want to end here and then pick the same analysis in the coming week. I'm not sure whether we are meeting on Sunday. If you are not meeting on Sunday, please try and join online session on Sunday. If you are unable to do face-to-face on Sunday, try and then join online on Sunday so that we can make a step forward, right? So that we can make a step forward. But I would urge all of you, when we need to communicate that to you, I would urge all of you to join. Right. Okay. Well, we'll think about it. But if there's a question, I'll pick it. If not, I leave you in peace. But it gets interesting here. It gets so interesting here. You love it. I'm sure you love it.
I hope so.
Oh, that's a promise from Isaac.
Okay.
Okay. I think we are fine. So have a very good evening. Enjoy your night.
Thank you.
Thank you.
You're welcome. Sammy, you are new here?
Yeah, so I used to join the in person, but I lost track.
Oh, okay.
I lost track along the line.